Hello traders, it's Samurai Trader here. Welcome to this training session. In today's session we're going to be talking about, and I'll be showing you a number of illustrations on live charts on trading using channels. Channels, in my opinion, form one of the top three trading patterns that we see appear in basically every market, every time frame. So we're going to be discussing some ideas on how to draw channels correctly and some ideas of how you may trade them and how they can also improve your bottom line. As always, my videos are raw, real and unedited, so you'll have to excuse me if we've got any bloopers along the way, but I know you'll forgive me for that. So one thing I'd like you to be very cautious of is this: the information I'm about to cover with you may be very basic, but it's very important. So as I cover the information, please don't discount it. Also, I recommend that you have a notepad and pen handy, because I can promise you, if you incorporate some of the ideas I show you today, it will improve your bottom line. Before we get into the PowerPoint and then go to the live slides, the live charts I should say, if you haven't already requested The Truth About Day Trading, one of my ebooks, you can click on the download link under the video, and I have one other. You can also request my free training manual. You can also request that in the link under the video, and of course you can go and visit my website at imadaytrader.com. But let's get straight into that. Before though, I do need to put up the risk disclaimer. There is a risk in trading. If you're new to my channel, or if you haven't watched one of my videos before, please take the time to pause the video and read the disclaimer. So let's get into it. Now, first of all, the concept may seem very basic, so it's very easy to think this is a waste of time when you look at some of the things I'm about to show you. So I want you to reframe it. Now, the ones, or the traders, are most guilty of this are the experienced traders. Over 70% of the traders I work with, or that are members of the Day Traders Fast Track program, already had 1 to 10 years experience. And what I tend to find, they can be a little jaded and a little closed-minded. So instead, I want you to reframe it as you watch this video to get the most out of it. Instead, I want you to be asking yourself, how can I use this to improve my trading? If you can pick up just one major idea, it may turn your trading around. So it's very important. Next, channel trading is a powerful yet often overlooked form of trading that capitalizes on the tendencies of markets to trend. They combine several forms of analysis to provide traders with precise points for when to buy and sell, place your stop loss and take profit. And when we go to the charts, we're going to be looking at some CL charts. We'll discuss those in detail. And remember, what I cover with you today here is applicable to all markets. It doesn't matter whether you trade stocks, forex or futures, it's just as applicable. Now, channels are useful for short to medium term trading, and in my opinion, most suited, really best suited to day and short-term swing trading. Now, there are 3 types of channels. You have bull channels, that is when of course the market is trending; bear channels, when the market is falling; and horizontal or trading range channels. And so we have 3 that we'll look at on the charts in a moment. Now, some key points. First of all, start with one pattern and master it. Now, what I mean by that is I have a number of videos on YouTube discussing different types of trading patterns. For example, I love double bottoms and double tops. I love ascending and descending triangles. I like wedges. There's a whole lot of different patterns out there. So what I recommend is, rather than try to take on 10 different patterns and incorporate them straight away, become very good at one. Master that before you move on to the next one. Now, I mentioned earlier that trading channels works on all markets and time frames, but the lower the time frame, the more noise, which means you'll have a greater number of false signals. So as you're about to see in a few minutes, you'll see that I like to apply the channels on what I call my anchor chart. I have my trading chart, my EC, my entry chart, and my AC, which is my anchor chart. So I'm always looking, if I'm trading with the trend, that is, in trading in the direction of the trend on my anchor chart, the higher time frame, which for most time frames or most types of charts that I trade is 3 times higher. So I'm always applying it to my anchor chart. Now, with channels, you're looking at buying the lows and selling the highs, which you'll get the concept when I show you this. Now when you get a channel overshoot, that is when price action shoots out of a channel for usually 3 to 7 candles or more, then reverses, then you may have a good possible counter trend trade. And I just wanted to put that there in case I forget to mention that, because counter trend trading, actually I'll leave it till I get to the chart, because there's a couple of examples I want to show you. Now channels can turn into a wedge or triangle, or an ascending or descending triangle equals a major move, and I'm going to show you a couple of examples of that. There are certain markets that I think are absolutely fantastic with channels. For an example, CL, particularly in the morning session. I tend to find that channels become less reliable in the afternoon session, and it's, look, seriously, it just amazes me every day how accurate channels are. You'll get usually at least 4 or 5 really good bounces off the high or the low of a couple of channels in a morning session, and they're just very reliable. Now another thing that's really good on channels, and in my opinion the best channels, are where you've got around a 45 degree. Now you don't have to have that, of course you can have narrow channels, but just keep that in mind. If the better the angle of a channel, the better the opportunities are. Now let me just point one thing out here. If you've got price action soaring up like this, you might end up with what I call a snapback trade. So you're probably not going to have an opportunity, or a channel won't form, because it'll shoot up then snap back. So anyway, I'm going to show you some live examples in a moment. Let's just have a look at a couple of older charts that I had there in my training materials. So what we can see here is a horizontal or a trading range channel. Now these are the channels that personally I don't like to trade. I find them too difficult. Okay, I'm what I call a momentum trader. I like to be trading with the trend, and so you'll see this quite often, that you're trading within a trading range. However, what we do know is that when we're in a range like this, generally the energy is building for a breakout in one direction or another. Now the trick, of course, in this particular case is making sure that you get that you don't get caught in what we call a false breakout. Now what you can see here, we had a breakout, a pullback, and entering on the trend continuation can be one of your most reliable ways of entering the breakout of a horizontal channel. But the real ones I wanted to focus on today are your bear and bull channels, and when we look at the charts you'll understand them, and I'll show you how I draw them. And you know, these are just, as I mentioned, very reliable. If you're a forex trader, I love them for an example with tick charts or range charts, and I personally believe they're best suited, bull and bear channels, for day traders. They just work really well. And so what we've got here is, of course, a bull channel. You can see the market rising, and I'm going to show you how I draw them as well in just a moment. Now a lot of these eventually you'll get a breakout, and of course the channel is broken, or they can turn into a rising or a falling wedge, or they can form a descending or ascending triangle. Now either way, just remember that if you're in a channel and all of a sudden you start to see price action change, what's happening here is the energy is building, the market is coiling, the market is ripe for a breakout. So these can be very powerful. When you start to see price action getting smaller and smaller like this, contracting, the energy is building, it's ready for a breakout. So let's look at the charts, and I've just got to mention here, and we'll come back to this slide at the end, please subscribe to my channel. If you haven't already, please make sure you subscribe to my channel so you can be kept up to date with all of these videos. Now what we're going to do is look at a few different charts. So I'll be stopping and pausing the video as I jump from one thing to another, because I just want to show you some classic examples of over the last week's trading of some channels. So if we look at the chart on the left is what I call my EC, my entry chart. Now just for your own records, this is a CL chart, a 233 tick, and it wouldn't matter what market this is, you'll see this it's almost identical every market with channels, the way they're formed and the way we set them up. So this is a 233 tick, and my anchor chart is a 610. Now what we can see here is, and I'm going to expand in a moment, but I wanted to show you this, we can see on the right when I've got a channel I can see what direction the overall trend is heading. Now I can then place more emphasis, and my more reliable trades are going to be trading with the trend. What I can see on the right hand side is what my channel here is in a downtrend, so I'm going to be looking for short trades. Now when it comes here, and if we look at this here, I've got what we call a T7. This is a double top against a floor pivot. When I've got a double top like this, and all of a sudden I look over here and I've got a bounce off a channel or a possible bounce, this just then dramatically increases the probability of this trade actually working out, and it might add another 5 to 10% towards the probability of this trade working. So let's now expand this chart and let's have a look at channels themselves. So what I've done, oops, and let me just get this back again. Okay, so on this particular day I've got a couple of examples. Now it doesn't have to be perfect, and you're going to get what I call overshoots. So you will get overshoots. Now when you get a dramatic overshoot, they are usually ripe for a good counter trend trade, but also channels can keep you out of bad counter trend trades, which I'll show you in a moment. So this is how I draw them. I'm looking for at least 2 touch points here, so I'll simply do this. I will just go, now this might just take a minute to pull this up for you, and I'll just what I'm going to do is not make it exact, so you can see exactly what I do. So here is a couple of touch points that I've got there to there. I will then draw a parallel line, and let me just make sure that I've got this disabled. Yep, okay, so I'll draw a parallel line, which I have just here, and I will then drag that up to a point. Normally I drag it up to here, or usually about the top here. Okay, so I've got a couple of touch points. I'll then drag it, and then, so I'm keeping it separate just to make it simple, then I will click on it and I'll extend it right, and I'll extend this one right as well. So that forms my channel. Now what I've done here is just separate it a little bit from the one I actually did. Now then what you can see is, as much as I only had that point, you can then see that price action come down, hit it again, almost hit the top channel again, come down and bounced again, finally before it broke the channel to the short side. Then I'm looking for a new channel setup. Now with this one, I then take that point to that point as it's forming. I then draw a, whoops, let me just do this for you. I'll then draw a parallel line. I'll then drag that down, and I only need 1 point at that stage, which is that one. So I've got that point to that point. I'll draw a parallel as long as I hit it there, and if you look what happened then, you'll see that price action then come down and then hit that lower channel. So let me move along here, and then it come up and bounce off a channel again, come down and hit the lower channel again. Now where this can be useful is this, that quite often, for an example, in the day traders fast track strategies, we'll have time and time again, we'll have trade entries on these points. What it does is, when you know you're hitting the high of a channel, you know you've got a possible short trade, and the rules are you sell the highs, you buy the lows, sell the highs, buy the lows, sell the lows, sorry, buy the lows, sell the highs. So perhaps you get the overall concept here. Now what is really powerful for me is that anytime I can glance over on my anchor chart to the right, and I can see what direction the overall market is heading in. Now as I mentioned, as the day goes on, quite often you'll find that your channels become less accurate, but you only need to pick 3 or 4 of these bounce points a day, and you can make a lot of money out of the markets, particularly when you incorporate and build in your own entry points, such as the ones that we have. Let me show you some more examples. Now this is an interesting one from last week, and that is we had we had inventory report on Wednesdays mornings at 10:30. So we can see I've drawn a channel. We actually had a wedge formation here. We had a breakout. We exit the market. We're out of the market at least 15 minutes before we have the inventory report. The market goes crazy. Now what I then did was to draw further parallel channels, that is parallel lines off these lines, and I drag them down. so I had 2 points. So I had this point and this point. I did another parallel, dragged it down to here. Now we only had it bounced up there. I had that point. Market then come down and bounced again, and up it went. Now what was interesting here is that these points here rallied straight off the parallel lines that I had up above. Let me show you another example. Here's another example. We had just this point to this point. This is all I need. I draw a small trend line from there to there, then I automatically extend it right. Okay, all I need is 2 points, and I then do a parallel line from there to there, which drags it down, and it touched there. So all of a sudden, that is, I drag it down, so I've got 1 2 3 points, so A B C. It comes down, hits my lower channel. There's trade 1. You buy, comes up, you're looking for a sell at your upper channel, okay, and there's your second trade. Now what I want you to do is to start to draw these in, and you'll start to see the patterns. It's very hard in a short training video to show you really the power of these, but where it's great for me as a trader is that I've only got about 1/3 of your screen showing, and when I've got my entry chart over here, I can simply glance over here and automatically see. It just gives me a clear direction to be looking for short trades. And then with my trade entries, for an example, just there we call that a 34B. This is an 8934B. So when you combine your trade entries, your high probability trade entries, with channels, all of a sudden it dramatically increases the probability of that trade working out. Now this is what we can see here is Monday the 3rd of July. Okay, so it was a very low, it was a low volume day because we had 4th of July the next day, and actually it's 4th of July today that I'm recording. And so you can see here I drew this channel in there to there, extended it right there. I had this point here, so I knew where to drag my parallel. Once again, just to show you how I do it, just again, so simply, as long as I've got 2 points, I've got 2 points there to there, I will then do a parallel. Let me just get back to the pointer. I will drag that parallel down to my first swing low, which is there. That's all I need is 1, and I then extend it right. I then extend that right. There is my channel. So I had that one there, so it come up and it was already starting to come down, of course. Then it come down, almost touched the bottom, and this is what we call a 200B. It come up, I then had a 34B. It then came down, and I had what we call an extension. Okay, so extended market, and this is what I call a T3. And so then we had a great T3 to the long side. It then come up, it bounced, and then it reversed. And just beware that usually the longer you're in the channel, you know that the greater the probability is you're going to get a turn. But this is something I want to show you which is very, very important. So my next channel here was here. So we went up, okay, we had this point, went up to the second point, come down. Here is the point for my channel, and you can actually just see under there to there the original. Let me see if I can drag that there. You can see that that's my original point there. Okay, so I just took that there, extended it to the right. Okay, now this is where divergence traders, or this is where you can be very cautious here on taking divergence trades. Now of course what normally happens within a channel, we bounce, sell the high, buy the low, sell the high, buy the low, sell the high, buy the low. But what happens here is, of course, we're in a virtually running parallel with our 34. When you see price action running parallel with your major EMAs, that is a real warning sign. This is where divergence traders get really slaughtered. And what you can see down here on my platinum MACD here, I had multiple potential divergence trades and entries. Now what you really want to look for is, if you're really interested in divergence trade, you want to look for what I call an overshoot, for price action to come out. When you start to see that happening, when you've got what we call angulation, price shooting out of a channel, it's called an overshoot. That'll dramatically improve the opportunity or the percentages of a counter trend trade working. Now this is something else that then will form. You can see finally we come up and we broke, come down here, and then finally hit the lower channel, and this of course is a bull channel. We then had a buying opportunity, slowly crept up, and then what happened, it actually formed into what we call an ascending triangle. And you can see what I call it a flat top. Price action just went along there. Finally we broke below the channel. Now technically speaking, I say that when you have a ascending triangle, price action is meant to go up in this, but it's not always true. And in this particular case we had a good break, and then it came and it turned into an 89B. So you can see here that quite often I'll turn into triangles or into wedges. Now the bottom line here, traders, is I've just given you a very quick overview here on channels. Now I could spend hours preparing PowerPoints for this and whatever, but this is free but I'm giving you, and there's a ton of stuff on the internet about this, and there's some great books. And that's one thing too, sorry members, I forgot to bring this up. If you're a member of the Day Traders Fast Track program, members, don't forget, in the trading ebook section I've got 3 or 4 great books in there on trading channels, sorry, on chart patterns. Let me get this right. So in the members library under trading ebooks, there are some great books there on trading patterns, so please make sure you go and visit those. So traders, hopefully you can just very briefly then just see a slim glimpse of what channels can do. But if you're trading with the trend and you're bouncing from the high to the low, etc., it just adds an extra 5 to 10% of probability of that trade working for you. So as we finish and wrap this one up, if you're not already a member of the Day Traders Fast Track program, please visit my website at imadaytrader.com, where you can request my free ebooks. And for $197, traders, you get the most comprehensive and perhaps and just very quickly here, there are over 300 videos now in my package. You're over 300 training videos. Some of them are Q&As, etc., but over the years I'm trading all sorts of patterns. I've got comprehensive PowerPoints on over really what I call the 12 world's best day trading strategies. I've got cheat sheets. There's a ton of indicators that are all included for $197. It's all included. If you're a new member, under downloads there are dozens of charts, there are apps, there's all sorts of things here. There's time frames that I like to trade, there's charts, there's a ton of stuff here. This is the world's most comprehensive program with no upsell. The only upsell is if you choose to join for $97 a month, you can join my chat room, which runs 3 hours a day, 4 days a week, for $97 a month, where you watch me call trades, explain trades in real time for $97 a month. That's the only upsell should you choose. However, everything is in my program, so visit my website, get more information on that, but most importantly subscribe to my channel so you can be kept up to date with more videos. And as I mentioned, traders, if you pick up just one idea, and this is very important as traders, whenever we read something on trading, we read a book, we peruse something, to be saying to ourselves, what can I learn from this? How can I use this to improve what I'm already doing? And one more thing I've got to say, if you're already an experienced trader, you don't throw out what I teach, even though I'm teaching you what are some of the world's best day trading and swing trading strategies. What you do, you take the strategies and say, how can I use these to improve what I'm already doing? Very important, the questions that we ask ourselves and the statements we say to ourselves. Thank you, traders. I hope you picked up 1 or 2 ideas from this session, and I'll see you hopefully, or you'll hear from me from my next video. Thank you.